All right, welcome to Money Never Sleeps. This is the show we talk about anything and everything that impacts the flow of money from around the corner to around the world. Today, we're talking about tech valuations, buybacks, Gamestop, Bitcoin, and a few other topics I'm going to touch on in a minute. Um, at the end of the day, if you've listened to my other shows, you would know I was touching on GameStop and what was happening. The bottom line is with GameStop, even though you had the Reddit trade, the manipulation, all this stuff going on, it doesn't negate the fact of what I said, that the company, if they change their methodology on what they're doing, that they can capture the digital crowd, and that is the key thing. If you learn, if you're a Netflix watcher, or you watch, Amazon Prime and all these other uh, platforms, the bottom line is that you know the value of that, convenience, everything else. Now, a Blockbuster, I mean, if you know a Blockbuster, you've been around a little bit. If you don't know a Blockbuster, you should learn its history, and it shows you that if you don't embrace the future, you're gonna disappear in a second. Blockbuster Video was the biggest video store chain in the United States, or in the world for that matter. They had the opportunity to acquire Netflix. They had the opportunity to make a deal with them. They chose not to. They went much later in the game as a Hail Mary, tried getting into the space, but it was over. It was over. So they went from being the king of the mountain, the king on top of the mountain, to basically falling flat on their face. And I think there's one store left because that's out of nostalgia somewhere in Oregon or something. So the bottom line is GameStop, I believe they've learned from this. I would hope they did. And again, when the stock went down to, from where it was, 4 or 500 to, 70, 60, 50, that type of thing. Even then, I was saying that if you own it and you believe in it, you just, you stay the course. You can go in a dollar course average down, reduce your buying prices. So I laid it out. If you listen to the other shows, this is my view. And the bottom line is, those that did, they're benefiting today. Stock is well over 200. I think that, and I said this, that at about 150, 175, that seemed about right. Okay, if they go and they embrace the digital end and they start doing that, these valuations are going to go through the charts. They're going to go through the roof. So we'll see what's going to happen there. And just staying, talking about digital, let's talk about tech valuations. The bottom line is you have a lot of tech companies, they've come down, from Apple on down, Tesla, everything else. Those prices have come down. So what transpires is that their PE ratios, of course, they're going to get reduced too. All right, so those valuations get reduced somewhat, and it brings more of a realistic tone to things. Now, will these stocks continue to zoom up again? Uh, who knows? But I think that it's interesting. I think it's interesting, but in technology, you're buying into the future. You're not looking at what they're doing there. If you're looking at a manufacturing company, you're looking at what they're doing at the moment. You're looking at their revenues at the moment. You're looking at all that. You cannot go and value a tech company based on what they're doing at that moment, because at that moment they may not be making a dime, but their future prospects are off the charts. Okay, if that was the case, and private equity, venture capitalists, and other type of investors believed in that, Facebook wouldn't be here. There wouldn't be a Snapchat. There wouldn't be a Google. There wouldn't be anything, because these companies you know, uh, would have been, bought into at pennies on the dollar. And but the valuations and their future prospects, you're looking, not even, it's not even enterprise value, is it's just the future prospects of the company. And right now, Facebook, yeah, they're trading, it's based on the PE. It evolves. It evolves. All companies evolve into this as you grow and you get bigger, and that's the way it should be, so that it becomes more realistic. You're still banking on the future, but still you're looking at more of numbers you can wrap your head around. If you're an accountant, a CPA, you're that type of person, and you have to go and be a forensic accountant, and you have to break everything down so it makes sense. Then at that point it makes sense. When you're looking at the future projections and what the growth potential is, for someone that's anal, it won't it probably won't make sense to them. They'll go and debunk it as much as possible, but at the end of the day, if you believe in something and you believe in the future of what's going to happen, then these tech companies have value, extreme value, more value than what you see in front of you. And that is a fact. Okay. Now, with, we've seen the stock market over the past few years, go through the roof too. Um, the bottom line is a lot of companies that were trading, a few years back, they were trading at lower levels that now they're double, triple, whatever they're trading at now. There's a lot more than they were back way back when. A few years ago, buybacks, were all the rage. Right now, not so much because the stock prices have come up so high. So a company going, and this is the mentality, you have to think about it, the company going and buying back stock is not a good investment for them, believe it or not, because now they're buying it at a higher valuation or higher stock price, at a higher stock price. So for them, it's better to put their money uh, into maybe making an acquisition, okay, into M&A, and that's not something else I'm going to get into, M&A this year. Because of the high stock prices, and these companies are valued a lot more. They're going to leverage that. You have interest rates that are going to start going higher, so they're going to leverage all they can, and not so much consolidate, but have some vertical integration, maybe some horizontal integration. It all depends on what they're going to be doing. Look what PayPal did. They just took over a company that's involved in the digital asset game. So they're trying to position themselves for tomorrow. And this is what I was just mentioning. You're looking at what's going to happen tomorrow. So if you're looking at that, you're going to find these diamonds in the rough, these companies that are out there that have that special something, and they're geared towards tomorrow. They're geared towards tomorrow, and that's a key thing. So you see the PayPal's, and even um, even JP Morgan, and a few other banks, they're looking at the crypto arena as far as being custodians. They're looking at the digital asset arena. Jamie Dimon was talking about fintech, that fintech is a threat to banking. And the bottom line is, it's the future, it's tomorrow. So if traditional banks don't embrace it now, they're going to lose out tomorrow, and they're going to lose market share. But I believe they are going to embrace it. Jamie Dimon, smart guy. I think he's going to go and start making having transitions within the bank to position them for that, what's going to happen tomorrow. So I think it's going to be very interesting. Bitcoin, I think it's at 54, 55,000. I said it before and I'll say it again. The value in Bitcoin is not so much for it to be utilized for commerce, because no one's going to see it as that. It's more of an investment. They're looking at it as a growth investment, where it's going to grow and build, and eventually they're going to find utility outside of Bitcoin, and they're going to kind of bring it all together and make it work. And I believe that's going to wind up happening because it is a store of value. There is a limited supply, and there's a mass adoption. Again, not so much to use it for commerce, but as an investment vehicle. So that's what you're going to see there. But it's opening up doors for the crypto arena. Again, cryptos that have utility. That's the key thing. No utility. Basically, you're not going to have too much going on there, and people will get bit by getting involved in these cryptos that are just popping up just for no reason. Have a reason. Have a reason. There's no reason why you're getting involved with it. Why, I mean, I guess if you're going in there for a quick trade, yeah, maybe, but the reality is what can actually happen longer term with it. There's no utility. What is it? It's like having a shell company that's trading and has no acquisition. Some point in time is gonna hit, is gonna hit a brick wall. So but look for the utility. If you're long-term players, look for the utility. It'll pay off. Talked about fintech, talked about M&A. I want to talk about the work conditions. We went from what we thought was normal to what became the new normal, and now we're going to have a combination of both. It's going to be a mishmash of both things, and it's going to be very interesting. It's going to be a flex work environment. People are used to working from home if they can for their whatever they're doing. So I believe that once everything starts opening up, as you see it now opening up, and hopefully the vaccine works, and hopefully they have some therapeutic version of this to prevent stuff in the future, you're going to have companies that are going to realize that they realize now, as we realize, that it's cost effective to have people working remotely. It makes sense. Now, if you need people in the office, I believe there's going to be a combination of remote and going to the office. So flex works, flexible work environment. And that's going to be very interesting. And I think that companies that are embracing this, they're going to benefit. It's gonna help their bottom line. Their margins are going to look better because their expenses are going to be reduced. Because if someone's working from home, you don't need to. I mean, the salary and everything, all that stuff needs to change somewhat, and I think it's going to, and that's going to be an interesting thing as things go on. And one other thing I want to talk about when you're talking about flex work and everything, document management, digital document management, that's going to be a big thing. Everyone, you have a number of platforms out there, okay, and you have DocuSigns, you have all these other platforms. DocuMega, I want to talk about this. DocuMega is an advanced blockchain technology enabled system. It allows someone securely to upload their documents, fill out forms, digitally execute their documents, share them, and have it's a traceable event. They get to see when it's uploaded, when they sign it, when they share it, when the other party receives it, when they sign it. They're able to do all that. The added security of it is that each document is embedded with certain codes that prevent fraud. So someone can't take your document and alter it without you knowing. It'll let you know that something was altered. Okay, and that becomes very important. Security is very important when it comes to document management. It has to be secure. It has to be something that again, that you can monitor, you can manage, you can trace. If you can do that, it's a big thing, for the legal profession, for the medical profession, for just business in general, logistics. Having these documents that you can manage and securely monitor and share, that's important. And with DocuMega, you can go upload a PDF, graphics, Excel file, and a Word doc file, and you can go and execute these documents up on it, and you can go fill out the forms and create the forms actually as well. You can add graphics on it and do all these other things. And again, it's cost effective. It's a great system, and I do urge everyone to go and just check it out. Go to documega.com. You know, I'm coming at it not in a biased way. I'm coming at it as I have to take myself out of the picture and say, hey, is this system worth it? And it definitely is. And this is why everything that's developed within the Megahoot ecosystem, it comes from a viewpoint of we're looking from the outside in, and we're saying, would we use this? And I say, would I use it? And if that answer is yes, then we have something good, because I'm very particular with the things that I use. This is why I don't use Zoom. Okay, because it doesn't suit my needs. I'm not comfortable with security aspects of it and everything else, and this is why we have Bureau Hive. Anyway, don't want to get too much into that. Again, with GameStop, is it going to go higher? I can't say. I'm not gonna speak to that. I do know that the valuation, the growth prospects of the company over time could be pretty good, if they embrace digital, which I think they're going to. So you have to look at that. Crypto, please look for the utility. Don't If you're going to trade it, but just go at your own risk. If you're looking at a long-term investment, look for the utility. If you don't understand what crypto is, please learn. Please learn and do your research, do your homework, so you have an idea of what you're dealing with. Because from what I understand, half the people that invest in crypto, they don't know what they're investing in. They just see it as like it's a stock, and it's not a stock. It's not a stock. Be careful, because you can get burned. You have a lot of scam artists out there that are going, and they're basically going and touting stocks, and they're going on Twitter, on this, on that, and they're pushing, and you get the pump and dump situation going on, and that's why McAfee, the great McAfee, everybody was really, oh my God, he's touting this, so we should get involved with this, and so on and so forth, and this and that and that. And what's happening? He has an indictment against him because of the pump and dump. Okay, don't trust someone because they're going on Twitter or Instagram or Facebook, and they're just because they have a name and they're pumping something up. Even when Elon Musk does it, don't just follow the leader. You may get a trade out of it. Other than that, be careful and do your own diligence. Do your own due diligence, because it is important. All right, that's it for this edition of Money Never Sleeps. Thank you for tuning in, and we'll be back with you with I'll be back with you, of course, with another episode at some point this week. Thank you.